CoreLogic National Home Value Index rose by another 1.5% in September nationally. Okay, so that's freaking awesome. Okay, taking Australia housing values to 17.6% higher over the first 9 months of the year. So the first 9 months calendar year growth rate in Australia nationally. This is town, cities, and of course rural. 17.6%, which is insane. Okay. So over the and then 20.3 higher over the last 12 months. So over 12 months, we've had a 20% growth rate. All right, nationally. That's nationally. So don't get caught up. Some are a lot lower, and some are definitely higher. The annual growth rate is now tracking at the fastest pace since 1989. That's pretty insane. That's pretty insane if you think about it. So we're talking about 30-year high, 31-year high in growth rates. So that actually outweighs the boom of 2005 to 2007 or 2008, whatever it was, the global boom. So that's very interesting, and it's something to obviously be really excited about, but we also need to be mindful of what that may mean moving forward. So monthly change in housing values, positive across every capital city. Perth index was probably the lowest of major capital cities, which is 0.3%, recorded the softest growth condition across the capitals. Although growth conditions remain positive, it is becoming increasingly clear the housing market moved past its peak rate in growth in March, when nationally dwellings increased by 2.8. Okay, so we've passed the peak, according to CoreLogic. We've passed the peak because the peak was March at 2.8% nationally. Since then, it's as I mentioned to you guys last time, it's kind of 1.9, 0.9, 0.8. So we're definitely in a sort of a trend downwards, but it doesn't take away what is happening at the moment. Okay, slowing growth conditions are the result of higher barriers to entry for non-home owners, along with fewer government incentives to enter the market. Speaks for itself. So obviously part of that huge boom was government incentives, building grants, and mortgage holidays and all that stuff. Okay. Raising a deposit has become more challenging for most cohorts of the market, especially first home buyers. Sydney is an example. Just take this into consideration, where the median house value is now just over 1.3 million. Okay, in order to raise 20% deposit, the typical Sydney homeowner would need to raise 262,000. They just can't do that anymore. So as our average house price rises, we're starting to knock a lot of people out of the affordability game. All right, so that is something that will slow the market. So the slowdown in the first home buyers can be seen. First home buyer loans has fallen by 20%. So negative 20% between January and July. So first home buyers are being shunted out of the market because of affordability, which is quite sad.
Sorry, is that across, or is that New South Wales?
This is all across. I'm going to go through the individuals now. This is national, what I'm reporting at the moment. Okay. There has been an increase in loan applications, though, which is weird, albeit from a low base by 45%, suggesting more home buyers are choosing a rent vest. I don't know much about rent vest, but the word says it all. Obviously, they buy a portion of it and they rent the other portion of it until such time as they can buy it, isn't it?
They buy an investment property that they can afford,
yes,
and then they rent to live where they can't afford.
Okay, there you go. Something I need to learn about. Rent vest. First time I've seen it. Okay, so despite worsening affordability, house values are still generally rising faster than unit values. So across the board, there is a couple of states, Darwin, Canberra, Hobart, the unit prices are out or performing as good as the houses, but generally, obviously, housing is still outperforming units, but the units are starting to come up for obvious reasons. People can't buy houses, so what are they going to do? They're going to buy units. Okay, so just a report on the month. Sydney, 1.9% growth. The quarter is 5.7, annual is 23.6, median house value $1,056,000. Melbourne, 0.8%, is staggering because these guys have been locked down for nearly a year. I mean, how they're doing business. I was speaking to some of our Melbourne members, and I spoke to Daniel, and you probably see him, but he had a slow month, 8 listings and 7 sales. So it's how they've just reinvented real estate as far as how they do business. And there's no bullshit. There's no stuffing around. They're dealing with people who are going to buy, and they're dealing with people who are going to list. It's actually, quite interesting. But they did 0.8 growth for the month, 3.3 for the quarter, and 15% annual growth. At median house price in Melbourne is $775. Brisbane, 1.8 month, 5.9 for the quarter, 19.9 for the year, and their average is $625, which is still higher than Adelaide and Perth. Adelaide came in next with 1.9% growth, 5.5 for the quarter, annually 19.1. Their median house price in little old Adelaide is $529,000. Seriously? We're still behind Adelaide? No offense to our Adelaideans, but really? Okay, Perth, we only had 0.3% growth and a quarter of 1.2%, which is definitely trending downwards. We'll talk about that in a second. And annually, still 18.1. So if you own a property, in Perth, you've earned nearly 20% in the last 12 months. Doesn't quite work exactly like that, but give or take 18%. Our median house price here in little old Perth is still only $524,000. So if you're a real estate agent in Perth, even though our growth rate is slower, that is great because it means it's going to go for longer, especially because we're actually half of what Sydney is. So we're going to probably crank on for at least another 2 to 3 years. And I'll talk more about that when I'm finished this part of it. How are we doing for time? Good. Okay, combined capital cities 1.5, quarter 4.7, and annual 19.5. 22% annual growth for capital cities. Combined regional 1.7, quarter 5.1, annual 23.1, and total so 23% for regional. So obviously regional has outperformed city because they're coming off a lower base. Makes sense? Okay. And of course, nationally, it's 1.5 for the month, 4.8 for the quarter, and 20.3 for the year. Any questions on that? All good? Great. Okay, so let's move on to rentals. Okay, so persistently low this is advertised stock. So persistently low advertised supply remains a key factor placing upward pressure on housing values across the country. In a positive sign, the trend in new listing added to the market is rising, albeit at a lower base. A number of new listings is up 15.7 since the recent low point in mid-August. While positive, this trend remains negative 1.2 below the 5-year average. So we're still below the 5-year average of stock to market, but we have had a 15% increase in stock levels. Thank goodness. Obviously, that is also strained a little bit because of Melbourne being in lockdown for so long. Their stock levels have depleted quite seriously. Where during this time of the year, we would normally have seen probably a bigger percentage. So, but it's a positive stat that, and it's likely to get better. So now, if you guys are doing 5, 10, 15, 20, 30, $50 an hour tasks, you're costing yourself $150, $200, $300. Okay, you guys should be spending four days a week prospecting because the money is there and you make hay while the sun shines. So if you are doing tasks that are not of seriously high value, you are crippling your company. Just a little side note there. Although new listings are ramping up, the total trend down in total active listings remains extremely low, of course. Absorption scenes amidst high buyer demand. Nationally, total advertised supply levels are minus 28.1%, below the 5-year average. So that just shows you how much stock is actually down. So while inventory levels remain low, the number of home sales is well above average. Interesting stat. So everything that's coming to market is getting sold. Across Australia, it was 25.5% higher than the 5-year average and 41% higher year on year at the end of September. So the sales are there. There's amazing sales. So again, never been a better time to be a real estate agent. Never been a better time to build a team around you to do all those low dollar productive activities and get you on the phone, banging on doors, chasing up every freaking buyer. And we're going to talk about that today. Today, we're going to talk about how you're going to capitalize on this market by basically falling in love with buyers, because that's where the sellers are at the moment. They're buyers. So similar housing values, the rate growth, national rents. Okay, so the rents are up, peaked in March again at 3.2, consistently eased, and it's 1.9 at the moment. So rents are increasing, again, not increasing as quickly as the property market, or it is in a downward trend. With growth in housing values continue to outpace rents, rental yields have reached new record lows. So again, with pricing going up, your rent and return. So if the market's moving at 18% growth and your rental return is increasing at 3 or 4%, you can understand that there's going to be a deficit. So Sydney's actually down to 2.5% return on investment. Why would you want to invest with all that headache for 2.5%? It will change and it will get better, but that's a pretty scary stat. It just means that we're not going to be dealing with that many investors, which we aren't at the moment. Melbourne 2.8. Regional Australia is about 4.4. We're around that 4.4% mark for a good return on investment. And so some of the other major, Brisbane and Adelaide, I suppose. Although yields are low, so too are investor mortgage rates. Considering the low mortgage rate, opportunities for positive cash flow investment properties remain plentiful outside. So lots of stock of rental properties in Sydney and Melbourne, if that applies to you. Another emerging risk factor is the potential for tighter credit conditions. So that's going to come because people are just borrowing. So that to continue to balance the market, they'll tighter credit conditions. Further trend to watch will be how consumption patterns are impacted by the post-lockdown environment. That could cause another spur of a boom because people have been locked down. Now they've got freedom. The coming months are likely to be advertised stock more higher. I mentioned that despite the potential headwinds in house price appreciation, monetary policies remain a cumulatively high housing demand. Okay, we know that. Very quickly, Perth last month reported 828 sales, which is actually 22% down. All right, which is interesting. What would be the reason for that? Anyone?
Would be stock levels, wouldn't it?
Yeah, could be. Decrease can be attributed to 20% decline in house sales, 16% decrease in unit sales, 44% decrease in land. So properties listed for sale, 8,360, which is down again. 8,360 we know is very, very low stock levels. If it gets down under 8,000, we're in trouble. Seriously, we're in serious trouble. Last week's total figures similar to 20% lower than a year ago. So rentals 2,236, that's been reasonably standard throughout the year. It is down 7% than 4 weeks ago and 24% lower same time last year. The leasing activity decreased 21% in Perth last week. So we just had a bad week. In real estate, members reporting 554 properties leased. That's the state of the market. Look, it's all guns blazing. I mean, seriously, folks. It's literally gangbusters at the moment. There is no bad news when it comes to the market. And you might say, yeah, but there's no stock. Okay. And I would argue that there is stock. All right. You've just got to go and find it. You've got to mine it. You've got to get out there and you've got to extract it. Okay, because there is people selling 15, 16 properties a month at the moment, but all they're doing is looking for stock and listing stock. And what they're also doing is they're problem solving. So when they find someone who doesn't want to move for one or another reason, they're coming up with a solution for them. They're not going, oh, well, I understand, and walking away and waiting for somebody else to come and list it. So you've got to be creative. You know, this market brings for a whole new set of skills and knowledge, and you've got to find out what it is and go and get it. All right. I promise you now that we will look back in 2, 3, 4 years from now and go, holy crap, I wish I had taken better advantage of that market. Focus on the positive of the market, not the negative. If you focus on the negative, that there's no stock, what are you going to attract? No stock. Okay. If you focus on the market being properties, you know, I had 2 texts from Brendan yesterday, and you know, he sold 2 properties in 2 days, and both listed and sold in 2 days. And he said, mate, I didn't even think that this could happen. He says, I'm absolutely buzzing. And that can be happening to you every single day. And you can see with the figures that we've written that this is happening to a lot of people. But you've got to get away from doing freaking admin. And you've got to get away from doing those stuff, or do it super bloody quick from 5 in the morning till 8 in the morning and go and prospect your little butts off to go and take advantage, because everything that you find, you will list, you will sell. And if you find someone thinking of selling and they're nervous about something, make it happen. We've spoke about probably a dozen different ways we can do that. I'm actually creating a story for the news about how to you know, how buyers can actually get an opportunity to buy properties. It's a vicious circle. It's a vicious circle. Okay, buyers can't buy, and everything they're putting in an offering they're missing out on, because it's going to the people who have the most money. As a result, a lot of people are not putting their properties on the market. Okay, as a result, a lot of them are trying to sell off market. As a result, you're not meeting the buyers at those off. It's a freaking circle. It's going around like this. But you are in control of your little micro market. The market is not real, folks. It doesn't exist. Okay? Because all that matters is what is happening to you. What do you do every day? How many people do you speak to? And what solutions have you got to be able to get people to move on? How skilled are you? How knowledgeable are you? How deep is the trust that those people have for you? Okay, so a lot of stuff there.